Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So the situation on the markets have changed significantly this week, and some things that were suggested to be lightly bearish, they now is becoming not quite lightly, but becomes heavier, and short-term fundamental background is worsened this week. Although in the longer-term view, the overall situation stands moderately optimistic, and currently we do not see significant reasons to adjust and review to change longer-term expectation as on the euro currency and the other markets. So current situation we treat as mostly the short-term, but nevertheless in the short-term perspective it could have stronger bearish impact on the markets that initially was suggested. If you remember, in last week in our weekly report we discussed how the common elections could make impact on the central bank policy on the providing new liquidity measures, and the common sense tells that theoretically they should provide something just to get some loyalty of the electorate. But currently the common opinion based on the news headlines and the comments from the analysts tells that it's really hardly possible the reaching of some agreement on the providing the new supportive measures until elections, and that changed situation significantly on the markets. Second reason is a mixed, confusing comments from the Fed representatives. As I said, it's one Federal Reserve officials tells the same that Jerome Powell tells, for example, and then Mr. Evans tells that Fed could start raising rates earlier than the 2% will be hit, and that makes market nervous. Markets doesn't like uncertainty, and in these circumstances they increase demand for the safe havens. Finally, situation with the COVID-19 is also unclear. So across the globe, you could see right now with rising cases, and the hazard of the new lockdown stands on the horizon. All this stuff make the pressure on the markets, and the overall statistics that we've got in the last weeks also was not very encouraging, especially in Europe. Inflation is slowed, the recovery is also stumbled, so that changed the current fundamental background on the markets. From the technical point of view, we need to keep an eye on some things. So first of all, on the monthly chart, as we come into the close of the September month, we need to keep an eye on the close of the September candle. And if it will become a bearish reversal candle on Wednesday, that could change the short-term technical picture as well. In this case, technical picture suggests two-leg downside retracements. The retracement to the downside could be compound. And as on the daily chart, we are watching mostly for 115 area. So we already talked about it previously. This is not something new. On the weekly chart, this 115 area is 114.85 actually is a confidence support. It's also accompanied by the weekly average sold area. On the daily, you could see that this is also ABCD, and that probably the point where the first leg of the downside action will finish, because here we expect some, if not the reversal, but significant bounce. But if on the monthly chart we will get the bearish reversal September candle, it tells you that upward bounce here probably will be temporal, and we could get another deeper retracement. This will not hurt the overall bullish view on the long-term chart, but it will tell you that rally and reversal on the euro will start later than it was supposed initially. If somehow market will show fast reversal and before closing of the September candle, and it will erase the reversal feature of the September month, situation could change more in the positive side. But currently we are worrying that this could be two-leg compounding retracement as on EUR, as on another market, as I shown you on the, for example, on the NASDAQ. So it's approximately the same situation there. Meantime, speaking on the technical daily chart, so what we have here, it's obviously that we're waiting mostly for that point. That is really a good opportunity for taking the long position. But take a look, the market currently stands at daily oversold. Also now it's flirting with the minor support area 116.15. On the OP, we haven't got any reasonable pullback, so most market was just continue up and downward action. But existence of the oversold tells us that if nothing extraordinary will happen, well, market could continue just slow down action with the oversold level. It will not show some collapse. Collapse is possible if something extraordinary will happen. Somebody will tell something important, or for example, next week we will get significantly better non-farm payrolls, for example. In this case, it could be demand for United States dollar improving position of the dollar, and this could lead to the acceleration. But keep all things equal, with the existence of the oversold, well, exclude chance that we could get some real strong breakout for this area. More probable this will be some slow down gradual action. On the 4-hour time frame chart, on the intraday chart, it's not much to specify because we have clearly bearish context here. And the one thing that we could consider probably the levels that might be useful if you're planned for taking the short position. In the current circumstance, we have 117.12 area is confidence resistance, and take a look. That's major 618 resistance 1772. It's right here. Here is also stands the minor XOP around 1606. Also, as this is also minor fib level, it might happen that maybe some minor bounce here could be done by the price. And keep watching for reaching the XOP. Here I draw the shape of the hand shoulders, but of course it could be some different shape. It doesn't matter actually. The one thing is what matters is just the levels that you could consider for possible taking the short position. And of course we do not consider taking any longs position with this possible reversal pattern, although it's not forbidden. But as we have the bearish context mostly, we are not interested with this trading. We're mostly watching for the levels where the short position could be taken with a pullback, because, well, overall sell-off situation and the speed is how strong market has dropped this week gives the hints that, well, this action probably will continue, and sooner or later, but we will see weekly and daily confidence support and agreement area around 115. That's our major target here, and that's what we will keep an eye on. So that's overall situation on the EUR. Also, guys, keep watching for external factors, because within the 1-2 months this will be very tough situation in the markets, and well, it's too many external driving factors that could make impact. The major of them we already have named. They are statement of the new liquidity measures and providing of the new liquidity. Some results of the president's run, so also important. Well, an overall situation with the virus, so that will shape the market in the nearest time.